You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app, or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at BANTIX.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. So maybe we'll talk some ag, some energy, some metals, maybe some equities in there. You never know. Lean hogs, you never know what's going to make it on the board. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-exciting The Options Insider Radio Network. Pleased to have you with us here on this fun program. Our old friend, Mr. Sean, traveling hither and yon again. I believe he's in Munich for the Risk Management Conference right now. He's promised to bring back some tasty, delicious Bavarian pretzels and maybe some schnitzel and all sorts of good stuff for the studio next week. So we'll look forward to that. But joining me to hold down the fort this week, our old friend, we wrestled him back onto the program, Mr. Nick Howard, the CEO of BANTIX Technologies, a.k.a. the creator of QuickStrike, a.k.a. the most beloved, I should say, curmudgeon in the futures options marketplace. Mr. Howard, welcome back to the show, sir. It has been too long.
Yeah, it was a welcome, nice summer break for me, but I'm back for the time being. But, you know, it might be, you'll be playing Where's Nick maybe pretty soon. Who knows? See what happens.
You know, they don't call you the beloved curmudgeon for nothing, sir. I'm glad to see.
Where's the curmudgeon?
Yeah, there you go. Where's the curmudgeon? That's what we need. Where is the curmudgeon on the show this week? And also joining us, holding down the CME Group hot seat today, is making a return appearance here, actually, on the program, Mr. Adam Webb, the founder over there at MACROHEDGED. Adam, welcome back to TWIFO, sir.
Hi, thanks very much for having me back.
In spite of what Nick said we can never bring you back on. I said, no, he was pretty good last time. I think we can bring him back on. So we'll give you another trial run here. Don't listen to what that Nick guy says. He's a curmudgeon for a reason. All right. With the gang all here, then let's get going. Let's dive right on into it. Let's break down the week. What's moving first? Then we'll get into some more specific products in a minute. By the way, you guys can find all this for yourself, cmegroup.com/TWIFO, TWIFO. You can generate all these reports for yourself, follow along, play the home game if you like, or of course head on over to BANTIX.com to play the pro game over there. And if you do that, you look for this week. Remember, change your settings to look back over this week and see what's going on. You'll see the big movers. Let's look to the upside first. Let's be positive. Number 5 to the upside this week. Again, this is just pure underlying, no volatility, no open interest, nothing like that. Lumber up about 4.5%. Nat gas up about 4.65%. Number 3, oats up about 5.33%. Number 2, our old friend iron ore keeps popping up there. Not much of an option story there, but interesting underlying story there, about 8.25%. And number 1 with a bullet this week, Class 3 milk, our old friend, Class 3 milk, dominating the tape here this week, 8.28% to the upside. Let's go to the downside now, to the dark side here. Number 5, our old friend WTI. We'll be getting into that in a minute, down nearly 3%, 2.82%. Not exactly a boon week for all things crude. Number 4, lean hogs, off over 3%, about almost 3.2%. Silver, after getting all that love to the upside, giving some of that back up this week, down 3.33%. Number 2, the old Ultra Bond, down about 3.5%. And number 1 to the dark side, the euro dollar there, off about 5.33%. But let's get into it. Since we got our buddy here, Adam, joining us, he likes to make them markets over there in WTI. Talks a lot of WTI in his chat room first. Let's start in WTI land. Adam, sir, what is lighting up your tape? What's catching your eye out there in WTI these days?
I think this week's been interesting developments. I think obviously the draws came in as everyone expected. The usual ramp up in September. I think the surprises that have come out for the market is a couple of things to kind of bear in mind is the nervousness of OPEC around U.S. exports. U.S. exports have really got to get themselves up from this current 2.9, which they're looking like they're going to hit about 3.5 by the end of the year. And the kind of when you kind of cut through all the junk that's come out of OPEC and everything else in the last 72 hours, the one for me is them hunting around for a further 400,000 barrels of cuts. Or they're calling it compliance, which is the new term. The key thing for me there is keeping your eyes peeled on OPEC. Really are trying to match off what the US will export in addition, because of the draws that are coming out of Cushing as well. I think there's an interesting play that the Brent WTI spread comes in between now and the end of the year. Maybe not a lot, but we're at $4.50 at the moment. That could come in as much as down as much as to $2, which would be an interesting thing. Don't think the options market's pricing anything for that at the moment, but all I've seen the last few days is continued upside. I think people are seeing this political sell-off and the noise from Russia today as an opportunity to scoop back in. We're still going to see draws out of Cushing. I think the fun and games doesn't start until first week of October, in which case at that point it's seatbelts on. It's going to get wild.
Last time you were on, you said the market was taking every opportunity, any little blip, anything they could to dump some upside and to sell those calls because it didn't seem like there was any upside love. Are you saying that's reversing itself a little bit now? People are scooping some upside now on the heels of this OPEC-driven sell-off?
No, there's longer dated stuff. The calls are still getting crushed. I just think from a seasonal perspective, we tend to see, if you just get any kind of, apart from 2014 when the big sell-off came, when the tax went on, usually this period of time, the second week in September through till first week in October, seasonally quite a bullish period of time for WTI and Brent. I think the noise coming out of Iran as well, that that they're exporting a lot less, although they managed to sneak out 500,000. I think they'll keep the rhetoric going to keep the price up, because it's hard to hold it back when the when the winter builds start coming. So I think the longer term guys, the longer term guys are kind of they're coming in and they're basically looking at pushing out kind of November, December time. But the shorter term plays at the moment are for this to kind of reverse and come back up.
It is a fascinating one to watch. Mr. Nick, I know a large chunk of your users still living out here in WTI. What's been catching your eye since the last time you gathered here with us on the show?
Well, I'll throw a question or two out to Adam for a second, if it's okay, because again, I've been on the sidelines a little bit, paying attention, but mostly just trying to get stuff going on over here and taking a little bit of summer break where I could. But Adam, back a few days ago in the WTI, we saw that push up into the around 58 or so. So yeah. What's some of this choppiness? Where is it coming from? I know that it's a lot of the talk that you had mentioned, but when you look a month ago, we're right back where we were, so almost a month ago. But we have had these spikes and then these reactions back down. I mean, is that just because people keep changing the talk? What's going on with that? I think
we're in a fairly kind of tight range, and if you kind of look at the kind of bigger macro picture, supply is increasing. The kind of 3 month out to 12-month view is the demand of crude is going to decline. OPEC's got a problem of plugging the gap. The US is, for a mid part of last week, was the world's largest producer. And I think we're seeing some scrambling to rebalance. Now, put all the political kind of junk to one side for a moment, and so the OPEC's struggling to rebalance the market anyway. And then what we're seeing at the moment is just that political uncertainty. All of a sudden, crude decides to follow the S&P 500, then it's not. Then we see changes in the White House administration. I think Bolton. We've not really recovered from Bolton news. We've not really recovered from the rumor of Trump wanting to make a deal with Iran. So we've got the markets is trying to make some stability, but we've got the political instability around that at the moment. I think that's what's creating the chop.
No, that was the one thing I wanted to ask. And then you talk about where there'll be some changes coming now that we're moving into the different weather pattern potentially here. Anything else out there from that standpoint that could be interesting?
Yeah, I mean, there's a few. It's still a kind of good trade is I think because of an interesting change in the market at the moment is where we'll be surprised after October of what could potentially be some continuing draws on Cushing. And I think we'll see the spreads well supported. I think, which is an unusual period. We normally see that backwardation get pushed a bit. So you see all the spreads blow out a little bit. So that could be, there's some interesting plays there. And, I think if we listen to this back and when we, roll forward in time to February next year, I think that people will look and say, hey, we saw surprising draws because of the change in some structural changes going on in around Cushing and the builds moving around the exports off Pad 1 and Pad 2. I think that could be a really profitable play, a low risk profitable play because you could spread it out between the December expiry out through to the March expiry next year. That could be an interesting play, especially in the option space.
Let's get into some of those options and see what was lighting it up out here. You've been talking about what's been setting the stage on the political front. Let's give our listeners a bit of a refresher. Obviously, had OPEC back in the crosshairs again this week. Unfortunately, or maybe fortunately, I guess, depending on your viewpoint there, no real decision over there on more supply cuts out of OPEC. They kind of instead have been focusing on bringing some of their recalcitrant members into line over there with Iraq and Nigeria and a few others. ECB, of course, cutting rates this week. That also putting a little bit of pressure out there on the energy space. And the Saudis coming out and saying effectively they're going to punt the ball a little bit. They're not really planning on any big decisions on big cuts before their next meeting, which is not until December. So, again, not a lot of near-term upside momentum there for the marketplace here. Coming into showtime here, we're seeing WTI off, not surprisingly off yet again. We mentioned it. It was one of our big movers and shakers to the downside this week. It's still off over 3%. We're a little bit shy of the 55 handle, about 54 3/4 or so. Looking at what was lighting up out here from a vol perspective. Remember we said before, WTI and energy in general is kind of maybe a bit of an unheralded play from a volatility perspective. We've had a few guests on now talking about how it's growing more attractive to analyze and watch the volatility of the space. And certainly WTI volatility has not disappointed. It moves and shakes on any given week. This week, it's another upside move here. We're seeing it net up and up pretty strong, up about 4 handles in that nearer portion of the term structure, coming off obviously a little bit less as you go a little bit farther out. In terms of where the action was, it was all pretty much about half of all the paper this week coming in that OC month here, and looks like it was pretty much a close tie. It was about a couple hundred contracts different between the OC double puts and the 58 calls. The double puts taking it by a nose. Actually, a few minutes ago, a few hundred more going up, pushing it into the number one category here with about 22,000 contracts this week. The lion's share, kind of a bit of a tie between Tuesday and Wednesday, a little bit north of 7,000 each, followed hot on its heels by the 58 calls, 21,600 of those, the lion's share of those coming on Wednesday, nearly 8,000 there. Slightly opening, slightly closing on one or the other. Not a ton of bias in either direction. Both fairly active strikes. As you might imagine, we were kind of vacillating in those range this week, and people were wondering, maybe we get some upside, maybe we're going to retest the lows. The puts winning out, but by a very, very narrow margin. Also action on the 50 puts, so again, that's not surprising. Even money, even kind of strike level puts tend to dominate the narrative out here in WTI, and that seems to be the case again this week. Almost 21,000 of those 50 puts going up out here this week as well. Again, most of the action in OC. Let's just scroll down here a little bit, see if we find any other exotic trades going up. 7,000 of the 50 puts also going up in DEES this week. If you like upside, 70 calls were the go-to trade out here for not a small amount here. It looks like about almost 7,000, 6,600 or so out here in February as well. So not all downside, mostly downside, but not all downside. You could get a little bit of upside action here as well. And, Adam, you made an interesting comment before. I want to come back to that a little bit because we touched on it before on the show, but we won't get a chance to spend a lot of time on it because it isn't, like I said, a huge option story. But if you're trading WTI, that WTI Brent spread is obviously of interest. You mentioned that's kind of an interesting one you're watching these days, Adam. Then maybe that spread you think coming in?
Yeah, it is of interest, and the kind of key reason is you could overlay some fairly decent risk with either independently trade the legs through a Brent option and through a WTI option, or you can actually trade the spread option itself, which is becoming more and more popular. It does tend to go through blocks more than anything else, but yeah, there's some nice plays out there.
Mr. Nick, anything on Brent WTI, sir?
To throw some other light on the WTI here. And again, I've been watching, but I haven't been in the thick of it. But I have been talking to Adam and Hugh and listening to what they have to say. But some things to take note of. I mean, if you look, and we don't talk too much about this, but if you go and look at quick vol and take a look and see what's happened in the let's say the October contract, for instance, as an example, we've stayed in we've had some movement volatility wise. If you go back to the beginning of August where we were around the mid 30s and we moved up a little bit above 35, but we've kind of bounced around between 30, neg 30 and 35 from an implied vol standpoint for that OC contract as an example. That OC contract right now has 5 days to expiration. So let's just jump out to the November just to give a little bit better perspective. So it'll give us the 60 to 30. But we haven't had a lot of movement in the implied volatility of the market. But what's interesting, and I don't know how much I rely on this for anything, but the 20-day historical or the 1 month historical volatility has been all over been really much higher. So the implieds really didn't follow the activity of the market so much. And again, that's the implieds of that, the money, and that's in this movement between these futures prices of 50 and 58. we're probably in a little bit of the belly of the vol curve, like we talk about, right? It's got there's a little bit of a smile to it. It's tilted right now, but the vol itself didn't follow the volatility of the market. The options volatility didn't follow the volatility of the market. So that's, I think, is a pretty interesting look at what's going on. Also, a lot of what we're seeing here, and I'm just going to run through a few of them. We have movement, we have a little bit of a bid in the volatility, but we're catching a little bit of that bid with the market moving lower, right? Because right now we have a put skew in most of these vol curves. So as we move lower, we're going to get a little bit of an increase in volatility. So again, make sure you look at that shift and slide column where you're going to see how much is because the market moved down and how much is because the market actually moves from an implied volatility standpoint. So with this move down from the highs of 58 and change, we're going to see increased volatility, but a lot of that increase was coming from the fact that it was just sliding up the put skew there. So those are the things that I'm still paying attention to. I may not be the macro education oriented here, but I'm still looking at the numbers, and those are some things to take away from that. As far as and I'll throw this over to Adam too, because I know this is what him and Hugh are always looking at over at MacroHedged. We've seen some changes in the skew this last week, and mostly it's been not so much that the calls have caught a little bit of a bid, and the puts have been a little bit offered. Not a tremendous amount, but enough to give us a little bit of a change in the tilt of the curve. So, Adam, you got anything on the oil skew that you want to touch base on, or if anything looks good? It looks kind of, to me, just looking at the 30-day and the 60-day, the channel looks kind of steady over the last couple months. But so I don't necessarily think there's anything there. But maybe you can add some light.
It's been pretty dull, to be honest with you. I mean, kind of we've outside, we've not put a crude trade on at MacroHedge for a while because we have just been kind of stuck in that range. There's been no real value. There's a little bit. RBOB upside is still pretty cheap. Heating oil is still pretty cheap upside. There's some really interesting bend in the skew there. I mean, to get any size on, you're going to have to work it for a few days. But I think there's potential upside there. I also think some of the fundamental changes that are going on as well might keep heating oil better bid than anything else at the moment. But yeah, if you think, like, we've been in a range since July, so this kind of, we're into the third month of this quarter. We've been in a range of 60, really 60, 52, an $8 range. So I'm amazed that Vega's holding up as much as it is doing at the moment. So it's but if you actually then pull apart the number of days where we've had a $2 range, it's actually been, as we talked about earlier in the show, very volatile, as you said, Nick, very volatile, but range bound. It's kind of everyone gets, and there's zero trend to it. And after the sell off at Christmas last year, we had obviously the big push up, and then it's just been in a coiling spring, getting ready for the kind of fourth quarter chaos. So I position this could look like cheap play for fourth quarter position, whichever you do. But skew wise, upside RBOB still cheap, upside heating oil still cheap. That's what we're looking at.
Well, I'd love to keep talking WTI. I know we could fill a whole show, but we have a broad spectrum of listeners on the show, which is one of the things that make it fun. And they're always hitting me up with ideas, different topics. I actually ran into one. He approached me at an event yesterday. By the way, if you see me at an event, a lot of you guys will recognize the voice. Maybe you don't recognize the face because we don't do video, but you all recognize the voice usually, and you come up to me. Don't worry. I'm a happy, nice guy. You can come and give me your ideas, your suggestions, what you like about the show, what you'd like to see more of. We love that kind of feedback. One of our longtime listeners on this program, especially, I think it goes by T-Mal in our chat room there, did just that yesterday at an event. It's always great to hear that feedback. He's pretty active in the ag options scene, and he was asking for some more ag options content. So I think we can accommodate that fellow. We also, I do believe, have a listener question along that same front. Tenda wants, can you do some deeper dives into ag options on the program? I love this show. There's really nothing else like it. T-Mal and others have brought up before, too. They're really, in a lot of things, breaking down the future side. In terms of the options, there really isn't a lot out there. So We love that you guys love it. We wish it could be 7 hours and we do every different product under the sun. That's a lot of time. Maybe talk to your broker. Maybe they approach us about a spinoff this week in Ag Options. How about that? There we go. What do you think, Mr. Nick? Should we do a spinoff? I don't know if TWIFO this week in Ag Options has the same ring as TWIFO. What do you think?
I guess we could. We would be really. We always fear the lean hogs, right, and the cattle and those things. I think we'd be pretty comfortable talking about the big three: corn, wheat, and beans. I know that there's a weird audience section out there that wants to talk about Class 3 milk, but this week in Ag Options, we got to come up with another. We'll come up with another acronym for that.
Yeah, TWIAO. There clearly is demand. I don't know about the name, but
I could think of a couple nasty ones, but I'm going to leave those.
Let's leave those off so we can keep our clean rating there in the iTunes. Yeah. This is why I bring back Nick. He's going to get us booted out of the iTunes store. See you at this 1 week there. That's why he's the beloved curmudgeon. But let's start there. Soybeans making a lot of headlines. In fact, they were just a hair's breadth out of our top 5 in the movers and shakers this week, with the beans up 4.3%. 4.4% would have got them into the top 5. No dice here this week. A lot of that moving, of course, a lot of big headlines in that space. The president just tweeting a few hours ago expected that China will be buying large amounts with exclamation points of our agricultural products. They bought 10 boatloads, it was announced today, of U.S. beans, their largest purchases since June. That's, of course, remember we've said it many times here on the show, soybeans kind of ground zero for the trade war there. Those purchases are expected to total about 600,000 tons. But, of course, it could be too little, too late. A lot of pieces coming out, particularly for here around our neck of the woods here, Chicago, Illinois. A lot of soybean farmers here, as you might imagine, about 75,000 by some estimates. So a large chunk of the U.S. soybean crop coming from this vicinity, and a lot of them not exactly happy or pleased with this trade war. There have been a lot of articles coming out recently, including here in Chicago, people making allusions back to Jimmy Carter banning Russia, I should say, from buying U.S. wheat. That embargo led to Russia growing their own and eventually becoming an exporter and did a lot of damage to our exports as a result. Some folks saying we may be seeing a similar thing playing out here in the beans, obviously with China saying no mas to the U.S. They've moved off to Brazil. Now Brazil has improved their infrastructure. They're growing a lot more, so there's more competition in that space now as a result. So a lot of U.S. farmers here are fearing that perhaps we've done some permanent damage to the soybeans as a result of this trade war. All that combining for some big upside. Overall, about 4.3%, hovering still shy of that 900 level, about 895 or so, up a whopping 37 handles this week. You know, Adam, it's been a while since we've done a deep dive into beans here on the show. We touched on some ags last week. Judging by our listeners, we need to do some more here on the show. But is this a popular product category with your users over there at MacroHedged? Are they big into the beans and the ags in general?
Yeah, I think the beans, corn, they're really popular. They've got kind of a really solid community. There's good liquidity in all of the products, so kind of everyone can get on them. And I think you do tend to find that people specialize in them. Whereas kind of whilst I've got a kind of day job, we'll also be involved in everything else as well. These guys are kind of hardcore focused in their world, and there's certainly a popular crowd. You can see that by the volume going through. But it's interesting what you say. I mean, I saw the Trump tweet as well, and I don't know. I kind of, I'm just staring at the moment at 30-day constant maturity call skews, and you just fading in. Fading these Trump announcements just seems to be a great play, but I'm fairly bearish. I think the ags just get I think beans and corn just gets faded, and also I'm just looking here, but with the thing you said about the new orders recently, the 10 ships of 600,000 tons of soybean, but you look through, you only have to search the internet for the amount of times China's been cancelling orders. There was an order cancelled recently for 544,000 tons. It's quite. I think these are good opportunities to fade. And it looks already, every single time we've seen these little jumps, that 5 and 10 delta call side on the corn just gets totally overdone and it just gets crushed 4 days later.
Well, there could be something to that, definitely. I mean, just you mentioning China does cancel shipments all the time. And on top of that, of course, there's a lot of talk about their local, they use it to feed their local hog population, and that population has been decimated by swine flu, so less demand there as a result as well. So a lot of interest. Mr. Nick, I know you're not a big ags guy, but a lot of your users are, including, I think, that listener at T-Mile, I think, is a big user of Quick Strike. Anything catching your eye out there in the beans and corn this week?
Yeah, I think what's probably most interesting, and I think when we started this show, that's when there was the heavy rain pattern down in South America, and we had some really wide gaps in the quick skew. But and Adam, I don't think you mentioned this, but something that we can keep an eye on. If we go look at the quick skew, which is going to be our sort of agnostic measure of how the call and put are related to at the money, these curves are super, super flat between the 25 deltas. Okay, so that basically means that the at the money and the 25 delta options are trading near or at the same volatility. So anytime, and if you're listening or you have access or you can go to the quick skew chart and take a look at the 30-day and the 60-day bean quick skew charts. You're going to notice that they're basically converged around zero, or they're very, very close to each other and flat to each other. So it's looks like some interesting numbers here, and probably worth taking a look at from a trade standpoint. Other than that,
I just tweeted that image. So when the Options Insider account, so it maps when people are listening back to this, just look for the tweet, and that image is attached to the bottom of it. So help people walk them through.
See, it's all symbiotic here on the show. But you're right. That has been interesting to watch. I remember a few years back, Nick, when we were just kind of starting this show and we were doing a deep dive with your buddy, Mr. Nelson, over there, who actually did see yesterday as well, talking about soybean skew and how it was just set up perfectly for collars. We haven't really seen that. Certainly not right now with that skew being so flat. We haven't seen that lining up again recently. Looking here, what's lighting it up right now, as you kind of mentioned, the vol up. Interesting stuff out here. The big print out here, when we're threatening the 900 handle, the big print actually looks like it was in the 8.5 puts out here in October. In fact, 38% of the paper going up out here in October this week. A good chunk today, not surprisingly, given this recent announcement and developments. Seeing about 6,000 going up today, about 3,000 plus going up Wednesday and Tuesday as well. Total of about 14,000. A lot of that opening. Again, we don't know for sure about today's paper, but a lot of action on these 8.5 puts, which is kind of interesting. Maybe some other folks agreeing with Adam here. Maybe it's time to fade this move, because piling in on the 8.5 after a rally threatening 900 is kind of interesting. And then we also saw hot on its heels, number 2 here. Looks like actually it was some upside, and it was upside out here in November. It was the NOBE, about 900 calls, doing about 11,000 contracts out here this week. The lion's share again today, 6,600 again today, and about 3,200 going up on Tuesday. Good chunk of that opening, but again, we don't know today's paper. So I thought we'd see more action on the 900 calls. We are seeing that, but it's the 8.5 puts that are kind of dominating the action out here, which is kind of interesting. Again, maybe going back to what Adam was saying earlier about maybe fading this rally. And since our listener asked so nicely for some corn yesterday, I'd feel bad if I didn't at least indulge him as well. Corn, he was trying to make the point that corn and the commitment of traders has the most people out there trading it right now. It's the biggest dog out there at CME, which is an interesting point, not one we get to consider a lot here on the show. I mentioned before, I know a lot of people who've gone out from broad equity indices and gone into products like corn and done fairly well, because you can wrap your head around it. It has the liquidity across the term structure. The skew is obviously going to be different, but if you can wrap your head around that, it's actually an interesting product with a lot of back and forth. Let's see what was going on here this week. The corn also up, but also shy of our top 5, doing about 3.4%. So not quite enough to break it into our top 5 movers and shakers here. Up about 10 handles to 365. The vol, kind of a mixed bag. Near portion of the term structure coming in. Longer term contracts getting a bit of a lift. The big action coming here in DEES, actually, with nearly 40% of the paper coming up in DEES. 3.5 puts was where the action was this week, doing 25, almost 26,000. Nearly half of that, almost 13,000 going up today. So again, today was a big driver, big mover out here in ag land. The other big day was Tuesday with about 8,300. Then we go off a little bit back here to actually to also the 3.5 puts. So maybe a bit of a roll here. Looking here at October, doing 22,000 there, about 13,000 going up today. So maybe a bit of a roll from October out to Dece. Either way, a lot of paper in these 3.5 puts in October and Dece here doing 22, almost 23,000 in October as well. So near term out of the money puts. Adam, maybe this is kind of referring to what you were just talking about. We're seeing upside moves in both corn and the beans, and yet the largest options paper we're seeing on the surface could be a bit of a fade. You think they're buying what you're selling here, sir?
Well, yeah, I just think, I think once bitten, twice shy. They've been bitten 4 times now, and I just, you just overlay the 5 and 10 delta call skew spikes to Trump's tweets, and it's faded a century.
Sounds like maybe you're not a believer in that Vol-Fefe index that J.P. Morgan was touting earlier this week, where they're trying to make that volatility index of Trump's tweets, at least when it comes to ags.
I think I love the volatility. I just, from a pure skew play, we just jump on the nerves and happily sell into it. I think you get paid, but it's not as an exciting trade because you're kind of using that the quick skew trade and you're playing that term a little bit more. But I think it's just if you're here to make the cash and wait, it's a great trade. I do. You probably think it has got a bit more upside. I mean, just looking at a beans chart and looking at the arguably it'll pop the top from previous month high of. Well, it looks like 896, and you could see it a bit higher, but I just think still keep saying it's selling into that call skew.
Speaking of that skew, let's break it down really quickly here in corn before we roll on some other products and get you guys here on the show as well. Like I said, the most active contract was the Dece, nearly 40% of the paper. So let's look at the skew out there. And it's kind of a little bit of a change, not a huge change out here. The puts getting a little bit more bid. They were nearly 4% cheap to the at the money, about 3.8. Now they're about 2.6. So getting a little bit of a lift to the puts. And the calls were a little bit rich to the at the money, about 5.5%, coming in a little bit, about 4.8%. So a little bit of a change in the skew, not a ton, given some of the move out there. Maybe you might have expected a little more. Maybe some of that going back to reinforce what Adam was saying earlier, that the folks are perhaps fading all this upside here. And recently, certainly some of the options flow could indeed be interpreted that way. I know you guys want a ton of ags. We got to keep on rolling. Stay tuned for the spinoff, TWIFO, or whatever the heck we call it. sometime in the near future here.
You don't want to know what we call it.
Call it hashtag hog love here on the show here. You guys love your lean hogs.
Oh yeah, the lean. We've been looking at lean hogs recently. We're waiting for a lean hogs or any form of live animal expert to come and talk to us. We've got some ideas, but it's one of those things that's you're either a complete specialist or know nothing about it. So
yeah,
we're staring at it, thinking, "Ouch, we want to play," but it looks like the Wild West that those products do.
Some of the worst horror stories I've heard from guys I knew who were former, let's say, equity and index options guys migrating into futures options. You hear the great stories from the corn and the beans and things like that, certainly in the E-minis. You hear the horror stories when they get out into products like the lean hogs because, it trades by appointment. You got to know who all the players are out there. It has only a handful of hours in the day. The skew makes no sense. The flow makes no sense. You're right. You really need to be a specialist in a product like that before you even attempt it.
Yeah.
We touch on it here on the show every now and then because the listeners like it and it's kind of fun, but we don't even pretend to be specialists in the hogs or the livestock.
Yeah. And there's just not enough going through it to kind of really have any trust in the skew. And we trade off the skew and live off the skew, so you kind of look at it and it's just all over the place.
What would you say is number 2 for you guys? Obviously, your market makers and WTI is kind of where your bread and butter is. But outside of that, what's your biggest product you guys are trading these days? It kind of just, I guess, gold, S&P 500. We do everything. I mean, we've never really got involved in stirs, but the last few years talking to Nick, we do that a lot more. But we're just you can't. Outside of the kind of the day job, the key thing is wherever we can find skew that's reliable and there's volume going through it and we can get on and we're looking at percentage return, we'll play. That's the key for us. But we follow where the bend is. Yeah, I hear you. And you mentioned equities. My buddy Sean out there, I believe in Europe right now, but stuff going on in his neck of the woods. He's obviously busy driving some flow out there in the Russell options. We'll get to that in a little bit, of course. Today, at least, coming into showtime, we saw most of the broad equity indices on rally mode, on hopes of a trade talk, on ECB easing a bunch of things, kind of contributing to that lift. So as a result, markets in the green. We're seeing vol coming in kind of across the board. The VIX down over a handle, about 1.15 handles or so from last show. The volatility of volatility, though, is up. Remember, volatility of volatility doesn't matter. It doesn't track the direction. It just needs some movement. So that vol up about 2 1/3 points from last show. And our old friend RVX, I should say, a.k.a. the VIX of the Russell 2000, that's off a bit as well, down to about 1870, off about 1.5 handles, which means that spread, which I like to talk about here a lot on the show, that VIX RVX spread is getting pretty wide. It's about 4.65 or so, which puts it about as wide, a little bit wider than it was last week. We usually see it hovering in that, let's say 2.5 to 3 or so range, and seeing it now up north of 4. That's pretty attractive. That's when a lot of you guys are hitting us up saying, where are the vol products on Russell? I wish they were there. I wish RVX was trading, but at least you can quote it and see it. Maybe that's a good indicator, a good flag that, hey, maybe you need to start playing in some of the Russell options against the E-mini options. Looks like someone was up to that this week. We got a decent print here. It's no matter what's going on, and Nick, maybe you noticed this too, I don't know, but no matter what's happening in the Russell this week, it's up. It's far out of the money puts that dominate the flow. About 5,000 of the 13.5 puts going up in March of next year, which is kind of par for the course. Pick any week. Far out of the money puts is all anybody seems to care about in the Russell. But clearly got some action out here this week. Let's see if we have similar paper out here in the E-mini S&P out here. I don't think it's usually quite as biased on the only far out of the money puts. Let's see, E-mini S&P, of course, we broke through that 3,000 level not too long ago. Seems like number one with a bullet this week actually was upside. It was up here in September, 30 quarter calls, 25,000 of those bad boys seem to be leading the dance this week. So a little bit of upside up here. I know, Adam, you guys like your skew trades. The equities don't have as much of the sexiness, shall we say, of the skew. I know whenever I talk skew and equities with Nick, he gets very curmudgeonly because it doesn't change as much.
Yeah, but I think that said is that before we came on, I was talking to Hugh and I just said, is there anything lurking around? And it looks like Russell upside, some skews really, really cheap there. So I think we actually kind of might even start looking at that tomorrow. So we'll see. But there's some. I probably look to kind of cover it off with some ESVIX to cover that side. But certainly those Russell calls looking super cheap.
Yeah, that's been a constant source of fascination for me, is that all the paper we're seeing out there, and it kind of comes in fits and starts with some pretty decent-sized prints like today, 5,000 lots, and kind of quiet again. That Russell product still kind of getting its legs under it, but all the paper that is there is all on the put side, so leaves the calls kind of persona non grata. So if you're in there, if you're looking for maybe some cheap levels, maybe Russell 2000 upside is the place to be. Mr. Nick, I know I have to drag you kicking and screaming into equities all the time, but Sean's not here, so you get to fill the footsie seat here as well today. What's catching your eye in the equities land, sir?
Oh, I mean, I can't wait to hear about some of the Russell ideas that these guys have, but mostly just want to mention, when you're looking at these TWIFO numbers and you see the volatility is decreasing, what you really want to pay attention to is it's really not changing that much. We're just, as we rally, we're moving along the vol curve. So remember, keep that in mind. It might show that implied volatility has been lowered, but the reality is it's just sort of sliding up and down the curve. And I think with all the things that are going on right now, the guys and I were talking about it this morning. When our quote unquote leader says some things, the market gets a reaction. But I think the consensus was that the reaction is becoming less and less, and we're really it's really not increasing the volatility. It might be moving the underlying market, but the vol is just sort of sliding along its path. So for now, I don't think there's anything interesting going on from a volatility standpoint. Maybe see a little bit of a skew difference on one side or the other at the money, but from an overall vol perspective, we're not really doing all that much.
Yeah, I'm just looking now at the Russell path, and you're right, kind of mapped pretty well to where everyone had it a few days ago. It's mapping okay. Corn's, the reason we kind of talked about corn as well is corn's little spike today has kind of lifted the shift slide a little bit more, so there could be some even more value in chucking that out. But yeah, that Russell and the ES has just plodded along as predicted over the last 9 days, actually. So it's kind of sweet. Congrats to the market maker there.
All right, and hopefully we got some congratulations in store for you guys as well. Maybe you got some good questions. We'll see. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the portion where you get to ask some questions. We already bumped up the question about the ags. Let's see how many more we can get to here. Love your questions. Keep them coming. You guys know how to hit us up. Let's go here. CLC. We're just talking about equity skew. CLC wants to know which contract has the steepest bid for puts in the S&P E-mini. Well, Mr. or Mrs. CLC, a lot of ways you can interpret this question. I'm going to go the straightforward route of just looking at what percentage bid to the at-the-money, which one has the highest bid there. And it actually just ticked up as we were just talking. It was looking like October there in the E-mini. As you go farther out in general, CLC, the bid does tend to increase. People like their hedging. Right now, we're very top-heavy in the equity indices, so it makes sense, a lot of bid for these puts. But it looks like the actually week 3 in November here just ticked up to 30.4% rich to the at-the-money. So that seems to be, at least from our cursory glance here, to be in the winning category. Mr. Nick, do you concur with that, sir, or do you have an alternative suggestion?
Well, that's kind of a tough one. I would tend to look, if I'm going to answer that question, I might look at the constant maturity and see which one has the highest. Yeah,
it's a challenge. There's a lot of ways to interpret this one.
Yeah, I mean, for me, I'm looking at the 25 delta, and the 90-day looks like the highest. The 15 delta looks like they're all pretty much dead nuts even. The 10 delta looks dead nuts even, and the 5 delta does. So when you start to consider, and then the 5 delta looks like the 30-day is the most expensive. So, and that's to me, that makes sense, because as you move towards expiration, you're going to get more of a bend in the curve in general. So I would say that constant maturity is going to give you a better indication of just things in general. Things in general, to me, look like there's the 25 delta is richer in the 90s, but as you go down toward the 5s, they're pretty much even in value, and then the 5s start to get a little bit bid on the shorter end of the curve, so which makes sense because you're moving towards expiration. So they're all pretty firm from a standpoint of a percentage of volatility to the at-the-money. So, and again, to be honest with you, I never understand those questions, because does it really matter which one is it could very well be due to illiquidity with a bad market. So that's why it's out there and high, and nobody has forced that market in. So I think you can't look at you got to look at it across the term structure, and you got to look at the strikes around it. So, but my answer would be look at the constant maturities.
And I think the amount of Vega per percent as well. So you can that's the key thing. I kind of just for the fact that I'm looking at the mini ES. Just the fact that the Z's trading, the 15 delta puts trading 22% with the Z, and only 15% for the September is kind of it's largely irrelevant because that percentage gap against Vega gap. Just looking here, you've got to do 5 contracts for every one Z contract to balance out your Vega.
That's why these questions are good. They're deceptively simple, and yet there's so many different ways to interpret just this one thing, like she was just saying.
Yeah.
So we just gave you 3 answers there, CLC. You got just straight up percentages, which is kind of the straightforward, quick way. You got the constant maturity, 15 versus 25 delta, like Nick was just talking, or you have by Vega, which puts it in a whole different light. So hopefully we didn't confuse you more.
I would always say with these things, do it Vega by delta. So check your delta out and load your Vega to the point.
Hopefully CLC, Mr. or Mrs., that helps. Even though Nick doesn't like your question, we still answer it here. We're charitable folks here on the old show. Here, it looks like Adam, this is a good one for you here. This comes from Mr. or Mrs. L09. They want to know any recommendations for someone looking to maybe become a market maker or a specialist in futures options. Any firms or products, any input would be appreciated. Keep up the fine work. Obviously, Adam, Nick, and I hung up our market-making hats a while ago, so you're the last of the Mohegans. You're out there still slinging it in WTI and others. What do you got to say here for Mr. or Mrs. L09? Maybe they want to jump into the fire with you, sir.
Oh, don't do it, is what I'd say.
I had a feel. How did I know you were going to say something like that?
Just under no circumstances. It's just, look, I say we're doing a training course at the moment, and there's a fascination with market making. It's just, Nick and I and Hugh, we probably spend 90% of our time in the Q&A saying don't do it, because one of the great things that the Merc's done is it's created so much liquidity in these key products that you can go and put on strategic plays, skew plays, or directional plays on minute spreads. The cost of getting yourself set up, the ongoing data, the infrastructure, the fees, it's heartbreaking to start the month 25 grand down just on data fees and infrastructure fees. So I would take every single benefit that the Merc has put forward now for everyone to have such great liquidity in most products and put your mind to exploiting skew. Don't worry about getting run over for half a tick of Theo.
I think that's well said. You're right. I mean, there's so many benefits now to being a customer, taking advantage of the liquidity that's out there. Why stand there and be on both sides if you don't have to? One
of the great things about the central order book is we can all throw limit orders in. So, it's not like the old days where you've got to pay someone else's offer or bid. Just chuck it right in the middle, right at Theo. And most people, they're desperate for 0.1 of a tick of Theo, they'll trade on you. So, utilize it. The power is now with the consumer of those entities, no longer the provider.
Nick, I'm assuming that you concur, sir?
Oh yeah. I mean, I'm always fascinated on how many people ask market maker questions, and they haven't even really begun to start even putting in orders in general. So, I mean, you can, and I always, what I've been saying is you could be a market taker. You don't have to be a market maker. Be a market taker. Create your market yourself. Figure out what you want your spread to be, and make the trade. And then now you're a trader. So you can be a trader or a market maker and a market, whatever you decide. But the market making, it's tough business. I don't know how.
It is. I mean, look at the names coming out of it. There's massive names in Chicago, household names that are pulling out because it's moving kind of after the global financial crisis. All the big banks, they were all pulling out, and it dispersed everywhere. And there's like hundreds of people all over the place, all popping up. And now it's re-centralizing. And unless you're a super heavyweight. It's not a space. You utilize the ability that we have all got, the same level of access and the same kit and the same ability to model a skew. Sit at home in your pajamas and take advantage of that.
Yeah, we've had some legends in the market making space over the years on the network, including Blair Hull. He got out of it.
Yeah. It was him that's top of my mind actually. When I used. My first jobs at Goldman when Goldman bought Hull. It was a kind of a weird thing. It was like a year ago, wasn't it, when he came out?
Yeah, he came out, and I asked him, I said, would you want to get back in? And he said, God, no, the startup cost is going to be at least $20 million, if not more, and I just don't want to pay that anymore. I just had Thomas Petterfy not too long ago on the network as well. He, of course, infamously sold off Interactive Brokers, or not Interactive Brokers, sold off Timber Hill. He just laughed if I asked if he would ever get back in the business. So, yeah, learn from those who have gone before you. It's rough water.
And these guys you're mentioning have got super deep pockets. You know, most people are talking about kind of worrying about whether or not they're 100K's worth of setup. These guys have ultra deep pockets that can quite easily kind of throw in 10 mil to get that set up properly. And they're saying no. That should be ringing alarm bells to everyone.
That music hopefully isn't ringing alarm bells to you. Unless you didn't like the show, then maybe you're a happy camper. But unfortunately, that music means we've come to the end of another epic sojourn through the world of futures options. It was a fun one as well. Touched on a lot of different stuff. Equities, your questions about skew, becoming a market maker. Don't do it. Short answer there. Of course, got a little bit deeper into ags. Hopefully you guys appreciated that. We'll look into trying to rotate more ags onto the show in the future. And of course, WTI, you guys know it. You love it. You always want more WTI. No one's mad about that. So at least we can all agree on that. But before we go, let's go back around the horn. Let's start with you, Adam. If folks are intrigued by what you guys are doing over there, maybe they want to learn more, maybe they want to reach out with questions about not becoming a market maker, where should they go? What should they do?
If you want to reach out to us, at MacroHedged on Twitter or macrohedged.com. Contact us, see what we're up to, see what we're about. And that'd be great.
There you go. At MacroHedged is the place to go. And you know him, you love him. He's the beloved curmudgeon of the futures options space. Before he retreats back into his curmudgeonry, Mr. Nick, sir, you guys are always working on cool stuff, new tweaks, new dark modes, new charts, all kinds of good stuff. What do you guys have up your sleeve over there in the land of Quick Strike these days?
Oh, lots of good stuff. We're trying to work them into the delivery process here, so we'll be getting alerts out at some point, and some other ways to look at old trades, so you can maybe test the strategy out and see what it looks like. Also been working with the MacroHedge guys with the options education course. So go out there on macrohedge.com and take a look at what's available. It's going on right now, but all the course material will be available as evergreen links. So take a look, because especially if you're new and you're looking for some things, we talk about a lot of stuff each week. So.
There you go. Check it out. And, of course, our buddy Sean couldn't be here. Head on over to FTSERussell.com, at FTSERussell.com. Also on Twitter, at FTSERussell. If you like all the data, you guys are always hitting us up about buy rights and strategies, premium harvesting, and the Russell 2000. That's the place to get all that data. If you want the vol products, the spreads widening out, hit them up. S. Smith at FTSERussell.com is the place to go with your questions. And, of course, head on over to our friends at CMEgroup.com/TWIFO is the place to go to kick the tires and light the fires on the reports that we're talking about here throughout the show. And on behalf of Mr. Nick and Adam and Sean, who couldn't be here, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions. We love them. We don't make fun of them. We just have fun with them. So, except for Nick. He makes fun of everything. But on behalf of all of us, we'll see you back here tomorrow for Volatility Views. That should be a fun one. A lot of vol in the equity space. And we do it all again next week, starting on Monday with the option block and rolling on into Thursday with a little bit more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at BANTIX.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.